Hello and welcome into this lesson. So in this lesson, we'll be looking at what a breaker is. So remember in line with the direction of the market, there's a bullish breaker and also a bearish breaker. And essentially what this is it's just a failed order block. So in the video in which we were discussing about order block, we said that, for example, this was an order block, but instead of when the market was coming back to retest this order block, we see that the market just went above and beyond this order block. So it's actually just a failed order block. But in this instance, in a breaker, we also want to see a form of self-stops. If we are focusing on a bullish order block, a bullish breaker, then we want to see evidence of some form of self-stops being run, then the market reversing to the opposing side and doing it dynamically. So this shows that the market has reversed and there's a continuation now in sync with that higher time frame direction or the previous direction that the market was moving towards. So we see that this was a bullish market. The market was just moving upwards. So in this instance, we just had a run on sell side liquidity. Then the market reversed. But initially, also this was our order block, or you can use these three down close candle. Once they were confirmed, this would have been our order block, or you can use this, whichever is okay for you. But we see that instead of being respected, the market came and ran through it and up and beyond. So also a high probability breaker is the one that you find evidence of imbalances, and for entry purposes, you want to, if there's an imbalance right at that candle that confirms this as our order block, then what I'm trying to say is this is our breaker, and if this breaker, while we were breaking this structure, so if there's an imbalance here, then this imbalance creates a high probability scenario for being retested. Also, for our entry point, we want the high of this breaker to be the high of this candle to be our entry point. So this should be the entry, where when you're using the the breaker as your means of entry. I'm trying to write this as our entry. Just trying to add a text. So this is our entry, and then depending on which, for example, in this case, which candle that you use for your breaker, but I'll use this small one. So this should be your entry, and the stop loss should be at the low of this candle, but I like adding some few pips just for spread purpose. So this should be your stop loss, and then of course while you're targeting towards now the opposing target, because sometimes you may get instances of having this breaker, but while the market expanded, for example here, maybe the market went and hit the target and so a new structure might be formed. So let us look at a good example of the breaker, and because we are looking at the pound, because we are looking at gold, we may see we have seen a bullish example of a breaker. Now this is a bearish one. So remember, we have to have hit in the breaker. We have to have hit a higher time frame PDRA, and I think I did not show you that in this instance here, when I was showing you this example, we hit a weekly imbalance. So there have to be a higher time frame PDRA that we hit for it to confirm that order flow. So you see, this is it. So in the daily chart, now we just drove into the imbalance, then we got this expansion. So even the breaker, you can anticipate the market forming to form a breaker. Yeah. So, and also here, you can go and look at your analysis, your higher time frame, but we see that here we had this break-in market structure. So we confirm the break-in structure, and now this down close candle is our breaker. So this is a bearish breaker here. Remember, I said that for the entry, it should be at this, use the low now of this candle. Now this will be our entry. So this should be our entry, and for your stop loss, you have to use this. This is the stop loss, and now you can extend this as the breaker. We see that we confirm a break-in structure, and also we confirm this breaker with a dynamic move. Another thing, we see that there's an evidence of an imbalance here. So essentially, we want to see something like this. Let me remove this. We want to see something like this. Sometimes we may get an imbalance, sometimes we may not get an imbalance. It depends with what the market will give you. And then there's a retest. Here we see that this imbalance was retested, or also the low of this breaker was retested. And remember, we want to enter this retest during session zone. Then of course, for targeting, as I said, target the next or the opposing discount array. So you have to do your due diligence in the chart to be able to understand where the market is retracing back into or moving towards. Yeah. So that's it about the breaker. Remember, I said the breaker, you have to see evidence of a stop run. This is a stop run because the market was in a buy market. We were buying, but we just fell short. I think there is an evidence of something that we fell short here. Then the market drove right into it. Then immediately we see a dynamic move or an expansion against this movement, this bullish movement. Yeah, confirming now a reversal. So you enter the retest specific time zone, then we continue moving away. So this breaker occur in different session, in different not session, but in different time zone. Not time zone, but this in the daily chart, in the 4-hour, in the hourly chart, in the 15 minutes. So it's not limited just to the daily or the weekly, but you can go to different time zones, time sessions. Is it the time sessions? The hourly chart or the time zone, time interval, different time interval, and be able to look at this example. So I'll just leave it at that, because we'll look at more examples when we are discussing the strategy. But for you, just don't leave it there. You can go and familiarize yourself with this concept. So thank you for listening and thank you for watching.